Okay, welcome back to another video. So today I'm going to talk about fundamentals, right? Because a lot of people who don't really feel that the waves are, well, basically an indication of the collective, social mood, the waves do actually tell you what's going on in the markets. Why? Because the waves are the price. What's the best indicator? Price action, right? And I want to make this clear now before I continue to bring you any more content, because the one thing that people fail to recognize is that fundamentals are completely manipulated in the markets today. Okay? Now, here we have a chart of Bitcoin. Now, Bitcoin to me is merely a reflection of what is a completely distorted market, right? The fact that Bitcoin was able to rise as much as it did during the last, well, since the GFC, is because of pretty much a lot of stimulus, right? So, what I mean by that is, well, everybody turns to fundamentals when they're trying to look for answers, except the problem is that fundamentals don't mean anything. Because if you think about what the word fundamental means, right? If you've ever looked up the meaning, fundamental is a central or primary rule or principle on which something is based. Now, you go ahead and you find these metrics or measures of, for example, CPI. Now, unless you've been under a rock for a long time, you will probably not realize or might realize that the CPI has been manipulated and they have changed the way that they perceive inflation due to the way that they've changed the way that CPI is actually reported. Okay, and I think it's become pretty obvious that inflation is a problem. But according to the fundamentals, inflation isn't really that out of control. Take, for example, the Fed not long ago saying that inflation is transitory, right? Now, even they got that wrong. Why? Because there's a whole bunch of stuff going on in the background that manipulates all of these metrics, right? All of the data, right? Are we actually producing anything near what we used to produce like 40, 50, 60 years ago? No, we're not, right? And I mean, I don't want to head into the conspiracy theory route, but I mean, it's pretty obvious that there's always a very good reason for them to have to print more money because they don't actually fix anything at all. No problem is ever actually resolved at the base level of the problem. All it's done, all that's done is a band aid solution, which is once again more money printing, right? Because the underlying factors that are causing this type of inflation and these kind of manias and bubbles is basically manipulation of data, manipulation of God knows what type of crisis that need to be engineered in order for more money printing to be allowed and accepted by the general population as necessary and normal, right? So I can go further into this really deeply, but that takes away from the fact that everything that we're seeing today is overvalued and driven by this type of behavior by central banks, right? They don't have any tools left. There is no tools left, right? When you take, and I'll show you once again the 10-year bond yield chart, right? Now let's go to the weekly view of this chart, non not on a log scale. Okay. So you think about this, right? You think about 2008, 2009 GFC. Well, where did that occur on the chart? Okay, so let's have a look here. 2008. So basically, it was around here, right? Now, during this time, we still had room to go lower with interest rates. So this is what I call a type 2 expanded zigzag to the downside. And every single wave is accounted for. And every single wave has a meaning behind it, right? So that means that not only have they exhausted every possible outcome or every possible way of continuing to grow this bubble, but once you get to zero interest rates, and mind you, they are probably negative anyway, this is just, a chart that can basically fool many. Things are underneath the hood are far worse than you could imagine, right? But what happens when the market dictates what's going to come next is that you get this kind of reversal that we're seeing now, right? This kind of 1981 all the way down to basically that's it. We can't go any lower and the market won't allow it. Okay, because the market is driven by the collective social mood of every single participant in the market. So a lot of people say to me, well, you can't really rely on the waves because you got to think about the fundamentals. What, you mean the manipulated data? You mean the manipulated information that they keep giving us every single day, no matter where you look, the mainstream media, right? The question has to be asked, is that right? Or do you just think that waves are just some squiggles on a chart? Because I'm pretty sure at the end of the day, if the market goes down, regardless of what your fundamentals tell you, it's still going down or it's still going up. Okay. So I need to really just hopefully try to illustrate my point here by saying that the waves are, in fact, the measurement of what's going on. And it's also very detectable if you know exactly how the waves work, as what is AriasWave, the whole reason I created it. So therefore, I would say that fundamentals can easily be manipulated because we have money printing and stimulus and QE and crisis and QE and more crises that then allow these central banks to do whatever they want. And at the end of the day, all that does is create inflation, and it's basically a form of theft, right? You own money, that value of that money that you worked hard to earn is worth less and can purchase less. Your purchasing power is going down every day, right? Just ask somebody who sets prices at your local supermarket and you ask them, have you ever had to put the prices down or do the prices just keep going up? You'll probably find that in recent times, prices have started to go up a lot faster and a lot more often. So, therefore, fundamentals, well, basically, it's a whole bunch of magic tricks that are done underneath, in disguise, right under your nose. There's a lot of stuff going on that doesn't really explain why we have inflation. Inflation is a hidden tax, right? It's hidden. Mind you, they already tax you for going to work. They tax you in all sorts of ways if you have a business, tariffs, everything, right? So if you really do believe that fundamentals is the key to understanding what is going on, then either you haven't done your homework and probably you're going to end up losing a lot of money, as probably a lot of people are beginning to right now. Okay. So this entire conversation revolves around pretty much the fact that you're not really being told the underlying mechanics of what is causing all the problems in the world today. But the waves definitely give you a very big, clear picture or a very good understanding of what you can expect, especially if it's a system that repeats over and over again, and it's never going to change. That particular sequence of waves will never change. That's what AriasWave does, right? Not other wave principles. Other wave principles give you a set of potentials that could happen, but that's incorrect. That's just a system that really doesn't understand the market, right? That's why no one has even made one change to the rules of, for example, AriasWave, right? Sure, they rediscovered AriasWave, they repackaged it, and they made money off, reselling an idea that was not even created by the founders of the company that runs today, right? And nobody has made a change to the way that the markets are interpreted using that system. So it is an outdated, prehistoric way of looking at charts, which was created in a time where we didn't even have the technology we have today. Okay, we just had a sick man looking at printed charts. Right now, no disrespect to Ralph Nelson Elliott, he did a great job for his time, right? But in all honesty, I do believe that that is now an outdated antiquity type way of looking, antiquated type way of looking at markets. Okay, so fundamentals don't work, right? And if you think they do, well, they probably will work up until the point where they don't work because of the level of manipulation and stimulus and fooling around with the underlying dynamics of the economy and all the lies that are fed from the Fed, promising everything just to make themselves look good, just to keep the people in power, and simply just to keep the bubble growing ever more larger than ever. Okay. So, right now, we're in the process of change. This is going to change everything because for the last 40 years, this wave D down has been choppy and basically made to last way longer than it should have and go way lower than it should have. Okay. This is the key reason why we have seen asset prices go up so high, including real estate. Right? In 2008, like I highlighted here, no lesson was learnt as to how the system was going. All that was done was prolong the pain that will eventually have to be felt by everybody who is a market participant, which I would say includes the majority of the population of the entire planet. Because these days, a lot of people buy houses with debt, not like it used to be pre 80s, right? Wall Street got together and figured out a way how they can keep this Ponzi scheme going. And it's built on a house of cards, promising low rates for so long, saying that they won't go up for so long. When we have a strong economy, we'll put the rates up, is a fallacy. And it's a lie and it's a trick to get people involved when they shouldn't be anywhere near it. That's great. Except it's not good when things like bubbles appear out of nowhere, right? The tulip mania was one such time when this sort of behavior happened, right? A global collective behavior. Whose fault is it? Well, it's everybody's fault because we're all part of this economic system, right? Sure, we have people who are in control, but we let them be in control and we also go along with it. So there is nobody to blame. It's just the way that it is. The waves tell me the way that humans behave over long periods of time. It's very obvious to me that right now we're going to see a massive crash in the markets, and it's going to wipe out everyone who's involved and who's levered up and indebted, because interest rates will definitely cause people to not be able to service their loans, and that bubble will not continue to grow because there is no way to let it continue to grow when money is more expensive, right? And that's why Bitcoin itself was able to grow to the extent that it did, right? And that's simply because during between since basically the GFC and now, we've had that last move up in the mania. Okay, the mania, which was created by policies that allow quantitative easing to happen, right? So now what we're seeing is the end of the road for that little show. It's going to end, right? And I've said it over and over again. In my last videos, I've explained to you the dynamics of the waves and how they can predict exactly what's going to happen. But when you put two and two together, you're basically using the fundamentals, right? But not the fundamentals that you get told when you listen to data, listen to people talk, right? Pull out their little megaphone and tell the world that everything is going to be fine. No, I'm not talking about those type of fundamentals. I'm not talking about the data that has been manipulated and contorted in ways that make it look like everything's fine, right? Because you're deceiving everybody, but you're not deceiving those that really know the underlying reasons why this thing cannot continue to grow until we see an actual deleveraging of the entire economic system. And once we do see that happen, then you better hope that we start producing more goods and services, because at the moment, the level of manufacturing and production has plummeted to new record lows. So, how can we have a system that has grown so big, yet the output of what we produce, the gross domestic product, right, has gone down into negative territory? That's fundamental knowledge. But that's actually more of a truth than whatever it is you hear these people say whenever they're trying to make everything look like everything is just fine. Okay? I have previous videos where I've basically said the same thing, but fundamentals, I just have to say it right now. If the markets were normal and everything and everybody was honest and people spoke the truth without, you know, uh, underlying reasons that benefit themselves, the 1% up the top there, maybe you could trust those fundamentals. But at the moment, we've reached a point in time where those pieces of information, they're not accurate. They're basically just plain lies. Okay. So that's the point that I want to get across today. I've already outlined what's going to happen according to AriasWave. A lot of things have started to go wrong, and you're seeing symptoms of them right now in different ways. Okay, a lot of stocks are starting to fall down, collapse, head south. Take, for example, what happened to Luna and Terra. Uh, there's definitely something going on, and this is just the beginning. The best thing for you to do right now is to really think about why you're invested and all the underlying reasons as to why you believe your investments are a good idea. And instead of following the crowd, do your own research. Learn the waves is one of the most important things I'm ever going to say. And in my new book, the title is Learn the Waves. I'll catch you on the next one.